Sure. I mean, Deere is a fantastic example of a big base breakout that spans about 2.5 years. So the stock cleared some resistance. And when you look at the chart pattern itself, it says, Deere should continue to rally with potential upside to 230 to 245, 246, and an ultimate base objective somewhere in the 260s. So we believe in that huge base on Deere as long as the stock stays above this support range
Yeah.
or the breakout point around 184 to 172. So we really like the longer term setup on Deere.
I like what that implies maybe about the U.S. economy, a $50 move to that ultimate point you're talking about from here. Let's move on to Disney, which, of course, has been struggling during the pandemic. But what do the charts tell you about that one?
Yes, I mean, Disney is very interesting, too, because in June, actually, we put out some charts on Disney suggesting that it looked like it was going to stabilize and go higher. And right after that, it went a little bit lower, but didn't invalidate its technical setup. So after earnings, the stock gapped up. And for the last couple of weeks, it actually formed a technical pattern called a bull flag. We broke out of that bull flag. So the bull flag is a continuation pattern. So what we think happens on Disney, as long as it stays above 128 to 126, we think it goes to 147 to 148 based on that technical pattern of the bull flag.
All right, so about a $15 move from here. Your other stocks are Morgan Stanley and Union Pacific. I wonder if you'd indulge me in the time that I have with you to say whether you think the market overall has plenty of room to run or not. I mean, that's the huge question on everyone's minds with all of these stocks seemingly breaking out today.
Right. I mean, I think longer term, the market's in good shape. We had a recession reset this year. And I think we are still in a larger secular bull market trend with plenty of upside. The risks we have right now are seasonality. And, September, October tend to be weaker. We got the election, which tends to show even weaker seasonality in September, October. But you typically get a nice year-end rally. And breadth is narrowed here. If you look at advanced decline lines, percentage of stocks above 200-day moving averages. So I think we got to just stick with things that look good. And that's why we focused on these four stocks.